If you guys were paying attention to the markets today, you know that all of the major indices, the S&P, the Dow, and the NASDAQ, all jumped between 2 and 3 o'clock Central Standard Time. That's power hour, the last hour of trading, because Jerome Powell was speaking today in regards to the Fed policy and specifically tapering. So the market is finally comfortable with what's going on with the Fed. We're going to talk about that. We're going to talk about why the major indices jumped, and then some different catalysts and stuff coming up for the market as well. So stick around. Hey guys, welcome back to the TipRanks YouTube channel. I'm Richard Allen. Thank you so much for joining me for another video. We're going to talk about the major indices today and why they all went up to record highs. The S&P finishing up 0.65% after being at record highs yesterday. The Dow at record highs yesterday as well, finishing up an additional 0.29%. And the NASDAQ up over 1% on the day, finishing over 16,000 points for the first time ever. But why? If you paid attention to the markets today, you know that Jerome Powell spoke about tapering and different Fed policies, but specifically tapering. Now, we knew this last month that they were likely to come out and say, look, we're going to start tapering now at a rate of $15 billion per month, meaning they're going to buy less bonds and government and mortgage-backed securities and things like that, okay? So they're buying $15 billion less per month to taper all the way for the next, let's say, 10 months, for instance, finishing up middle or fall of 2022, where they won't be purchasing any more mortgage-backed securities or government bonds, okay? So this is all really a really important note, but why would the major indices be excited about that? Why is it a good thing? That's a good thing because they have more clarity. The major hedge funds, retail investors, everybody investing in the market should feel good about this because we have clarity from the Fed. We know that they're going to be purchasing less. This is a good thing for the markets, okay? We also had some further clarification on interest rate hikes and things like that. And Jerome Powell came out and said, look, we don't know what the landscape, the economic landscape is going to be over the next several months, several years. We don't know, right? So we don't have a date of when we're going to do any sort of interest rate hikes. Now, we have different Fed presidents around the U.S. calling for rate hikes sooner rather than later. You have Jerome Powell not necessarily agreeing with that, but he tends to give answers and lots of non-answers in a way. He's really great at that. So we don't have really any indication on when interest rates will happen, but we're likely to see some sort of rate hikes next year. Now, under what circumstances would we be seeing some sort of rate hikes? Now, we would be seeing rate hikes if inflation comes down, right? We've talked about that under 3.5%. We've also talked about other things like reaching full employment. Now, they don't really have a benchmark. They don't have a number. Like, is it 3%? Is it 4%? Like, what's the number? What's full employment? We don't really have a benchmark for that yet. That is more of a vague thing, but I think that being a little more vague for the Fed tends to give them a little more power, and a little bit of uncertainty to the market isn't necessarily a bad thing. So let's talk about really quick some new catalysts coming up in the market. Tomorrow, for instance, we have Toyota, Regeneron Pharmaceuticals, and also Kellogg announcing earnings before the bell. And then we have coming up soon, we have Dropbox, Expedia, Airbnb, Shake Shack, Square, and Uber, all reporting either tonight after the bell or tomorrow morning. And we've had a pretty decent earnings season despite a couple of misses by some massive companies like Apple and Amazon. Now, one thing to note, right? The economy is going to have to continue to show signs of significant improvement. If it doesn't, it's probably going to be a little bit, we're going to see a little bit of rough patch early on next year, similar to what we saw this year. Remember, February, we had a huge drop pretty much across the board, but it turned out to be a buying opportunity just like it was in 2020. So if we do see some sort of correction or crash early in 2022, which we are likely to, unless we get some sort of craziness happening with hyperinflation or something like that, and it's really drastic, it will most likely be a buying opportunity. And again, depending on your time horizon, any sort of crash or correction is usually a buying opportunity. So I wanted to bring you guys up to speed on what Jerome Powell said, why the major indices jumped so much, and then give you a little indication on some upcoming catalysts as well, and let you know that, look, there's probably going to be a big buying opportunity relatively soon, but I think we're still months out from that. We can't just continue to hit record highs over and over and over and over without some sort of correction. Now, 10%, 20%, 15%, something like that, maybe even more. Now, individual stocks will get hit harder than the major indices. They always do. You see it in some of your favorite stocks. So, guys, thank you so much for joining me for another video. I appreciate each and every single one of you. As always, if you learned something new or found any value in this video at all, let me know by hitting that like button or that subscribe button down below. And as always, I'll see you in the next one.